Are you ready for the biggest tax cut in American history? Trump has just announced his new tax changes, and if Congress approves them, it can mean huge savings for millions of Americans. And here's the catch: not everyone benefits equally. So, in this video, I'm going to be breaking down who wins big and who doesn't. I'm also going to be sharing with you how much you can save, and I'm also going to be sharing with you the surprising hidden impact on your finances. And trust me, this is not just another political announcement. These tax changes could literally put thousands of dollars back into your pocket. So let's dive right into it. All right. So let's go ahead and talk about the first tax cut here, which is no tax on tips. All right. So just imagine being able to keep every single dollar of the tips that you earn while you're working your job, right? So no more IRS deductions eating into your paycheck. So currently, the rule is with tips, if you are a bartender, server, hairstylist, doing rideshare driver, or a hotel worker, right? You already know that taxes on tips could be really annoying, right? And currently, the requirement is that you're going to have to go ahead and pay taxes on those tips. And one of the things with this new rule, if it gets put into place, is that you no longer have to be able to pay taxes on those tips, right? So even if you are going ahead and collecting these tips, whether it's a cash, whether it is documented via an app, for instance, you'll no longer have to go ahead and pay tips on it. So it's going to be 100% tax-free tips. So under this new proposal, tips are going to be completely exempt from taxation, meaning that every single dollar that a customer leaves as a tip goes directly into your pocket. No more withholding, no more IRS tracking, just more money where it belongs with you, right? So to give you an example of this, the impact of this, right? Just imagine if you had $30,000 per year in reported tips, right? That could mean $3,000 to $5,000 in extra take-home money simply because you're not having to pay taxes on it. And over a 10-year period, that could be $30,000 to $50,000 back into your pocket. So why is this important, right? This move is just bigger than just a tax cut. It's important because for a lot of people who are receiving tips, it could really be able to help increase their buying power, right? So the IRS currently has been having a lot of trouble being able to even track every dollar in tips, right? Which is leading to a constant cat and mouse game of audits and compliance checks. So by being able to eliminate this tax on tips, it removes this issue. It makes tax filings a lot more easier and simplified for millions of workers, and reducing the IRS's enforcement of being able to tax on these tips, right? So it's less paperwork, less audits, and more money for workers, right? So it's a win-win for both taxpayers and the government. But the big question is, will this even pass? Is it even possible? So Republicans and people who support this argue that this move will be able to boost service industry wages, helping people who are currently struggling be able to have more of the money back and encourage them to be able to provide better services for their customers, right? The opposing side says it could be some issues because this is possibly going to, by eliminating this, going to reduce Social Security, Medicare funding, since these programs really rely on the payroll taxes and specifically taxes as it relates to these tips, all right? So it could also mean that people may end up abusing the system, or people who are employing people who receive tips, they may try to lower their wages even further, knowing that the workers rely entirely on tips. So the real question becomes with this, do you think that tips should be tax-free? Let me know in the comments below what you think about that, all right? So the second tax cut that you need to be aware of is there is not going to be any tax on Social Security benefits, all right? So if you're a retiree, if you're soon to be an retiree, this could be a huge impact for you. And this is what is currently being proposed, all right? So right now, as it states with the current rules, your Social Security benefits aren't automatically tax-free, right? In fact, many retirees end up losing thousands of dollars in taxes every year because they have to pay taxes on their Social Security benefits, right? So if you earn more than 25,000 as a single filer, or 32,000 if you're married filing jointly, the IRS can tax up to 85% of your Social Security benefits, right? So that means if your total income, including your pensions, part-time work, or investment earnings, is too high, the government will be able to go ahead and collect taxes on it. So many people who are retired, right, they're working on their fixed income and they're forced to pay thousands of dollars in taxes. So with this rule now, they're going to be able to have more money back. All right. So a quick example of this: if you receive 24,000 per year in Social Security benefits, but also earn $40,000 from a part-time job and investments, you could owe up to 85% of your benefits, right? Potentially losing $4,000 to $6,000 per year just to the IRS. So for a retiree, it's a huge difference. It's going to impact how you're able to pay for your healthcare, your groceries, or even being able to stay in your home. So currently, Trump is planning to be able to eliminate this, and he's saying zero taxes on Social Security benefits, which is going to be a huge factor again. But of course, the other side believes that the impact it's going to have is that we're going to have, again, less money to be able to pay for all the other things that we use the tax revenue for. So it just really depends on what do you believe is going to be the best thing long term, right? So that's going to be key. Next, another big tax cut that's going to be put in place is no more taxing on overtime pay, right? So just imagine if you were to go ahead and put extra hours, you sacrifice your weekend, you're working long shifts, maybe working overnight, only to watch that money and that overtime pay literally disappear due to taxes. So what another proposal that's going to happen is that they're looking to eliminate that overtime tax. And right now, the government treats overtime pay the same as regular income. So that means every extra hour you work pushes you into a higher tax bracket. So your overtime earnings get hit with income tax, which is going to be Social Security tax, which is 6.2%, Medicare, which is 1.45% on top of any state taxes. And in some cases, half or even more of your overtime pay goes straight to the IRS. So to give you an example of this, let's say you earn $20 per hour and work 10 extra hours this week. All right. That means your extra earnings of $200 in overtime pay, you're going to have to pay taxes on $40 or even $80 depending on your tax bracket. So your actual take home pay is just going to be 120 to 150 instead of the full 200. So for anyone who depends on their overtime money to be able to make extra money, this is going to be a huge impact. So not being able to pay tax on the overtime, a lot of people are going to be benefiting from this, especially those who are working hourly. So this could be a huge impact for healthcare workers, truck drivers, factory employees, law enforcement, first responders, a lot of people who are in service industry types of professions. This is going to be a huge impact for you, right? So a typical worker earning $5,000 in overtime per year could be able to have an extra $1,000 to $2,000 instead of having to pay that in taxes. So that's over like 10 million people who are going to be able to benefit from this. So the question becomes, will this actually be able to happen? Again, time will tell if they're going to be able to do this. Congress has to pass it, of course, but again, people are worried that they're not going to be able to fund a whole bunch of other government programs because they're no longer going to be able to collect on these taxes. All right. Number 4, as far as tax cuts are concerned, is now they're looking to extend a lot of the tax cuts that were put into place in 2017. So currently, the Trump's tax cuts that he put in place in 2017 are expected to expire at the end of the year in 2025. So meaning that your taxes could automatically increase unless Congress renews this tax cut. And if this bill doesn't pass, the standard deduction is going to literally be cut in half back to how it was before. And the tax brackets could even go back to the higher rates that they were before. So Trump's plan is to be able to permanently extend these tax cuts, which can mean lower tax brackets, being able to keep the standard deduction higher, and also be able to still keep that 20% deduction for small businesses. So that's going to be huge. Another tax cut that's going to be put in place is the SALT cap. All right. So if you live in a high income tax state like New York, California, even New Jersey, this is going to benefit you, right? So right now, the state and local tax deduction is capped at 10,000, which limits how much the states and property taxes that you're going to be able to deduct. So Trump's plan with this is to be able to raise or even eliminate the cap entirely, which can mean a huge tax savings for people who own homes in these high tax states. All right. So the controversy that relates to this is that this tax cut pretty much benefits wealthy people, right? At least that's what a lot of people believe. So in those states, right, making it probably one of the most debated proposals in Congress. That's another tax cut. Another tax cut that they're looking to do is going to be the Made in America tax break. All right. So here's going to be a game changer for those people who own businesses and specifically manufacturers in the United States. So what Trump is looking to do, he wants to slash the corporate tax rates again, but only for companies that manufacture products in the United States. So currently the corporate tax rate is 21%. The new proposal is going to bring it down to 15%, right? And the goal of this is to be able to bring more jobs back to America and discourage people from outsourcing. So that is going to be another tax cut. Another tax cut that he's looking to implement is closing the carried interest loophole. Okay, so this tax change targets people who are doing private equity, hedge funds, even venture capitalists, some of the wealthiest people in the country. So right now, investment profits called carried interest are taxed at a lower 20% capital gains rate rather than a 37%. So Trump wants to be able to close this loophole, forcing billionaires to pay the same tax rates as regular workers. So this could have a huge impact on a lot of people, specifically the wealthy in the United States. So again, these are some of the latest up-to-date information as related with the proposed tax cuts. Let me know what you think about them, and I'll be sure to update you on much more as it relates to this. Take care, and I'll see you in the next one.